Argentina and Brazil find themselves on starkly different economic trajectories under the leadership of Javier Milei and Luiz Inácio Lula da Silva, respectively. It's December 2024, and these are two very different Decembers that these countries are having. While Argentina's economy is not yet out of the woods, it's experiencing a resurgence, whereas Brazil is facing financial turmoil and declining investor confidence. Javier Milei's presidency has marked a significant shift in Argentina's economic landscape. His administration's radical reforms have yielded notable successes, even in the face of political constraints and limited congressional support. The size of Argentina's state as a percentage of GDP has been reduced by 20%. Transforming a massive public deficit into a surplus. While GDP has fallen, it did so by less than forecasted, reflecting Milei's effective strategy of pulling the band-aid swiftly and painfully, but during a short time, rather than slowly and gradually, a strategy that had failed in the past under Mauricio Macri. This strategy paid off, and recent economic stats assessing the third quarter now show an impressive growth of 3.9% from quarter to quarter. This was almost double what JP Morgan analysts had forecasted. Inflation plummeted from 12.8% in November 2023 to 2.4% in November 2024, and this was achieved without resorting to price controls. This was accompanied by a reduction in the gap between the official U.S.-Argentine peso exchange rate and the black market rate, known also by its street name, Dollar Blue. Milei defied critics who claimed his promises were unrealistic. Within a month of taking office, he eliminated the primary deficit, a feat skeptics thought would require 5 years. Despite having no congressional majority and leading a relatively new political party, Milei enacted sweeping reforms within 10 days of taking office. While the Ley de Bases was somewhat diluted in negotiations, it enabled significant economic flexibility. Argentina met and even surpassed all IMF agreement targets, demonstrating fiscal responsibility and commitment to financial reform. The return of Donald Trump to the U.S. presidency has fostered a favorable international environment for Argentina, with the prospect of advantageous bilateral agreements. With inflation under control, Argentina's financial sector has come back to life. Thousands of loans and financial products have been made available to the public, restoring access to credit. Import tariffs and other taxes have been lowered or eliminated, encouraging trade and investment. Bank deposits in dollars have reached an all-time high in record time. Public sentiment has shifted dramatically. While in 2022, 80% of young Argentines considered emigration. By November 2024, the number of Argentines who wanted to stay in the country was 67%, signaling newfound national optimism. Admittedly, these are two different studies that don't sample the same demographic. The study from 2022 focused on young people, while the one in 2024 sampled the entire population. However, it does show that in general terms, the people of Argentina are becoming increasingly optimistic about the country's future prospects. Unfortunately, not all South American countries are moving in the same direction. In contrast, Brazil's economy faces increasing instability, with Lula's policies eroding investor confidence and straining public finances. Much of it is blamed on his Minister of Finance, Fernando Haddad. The Brazilian real hit an all-time low in December 2024. Once bullish on Brazil, investors are now wary due to mounting budget deficits. In all fairness, the issue of deficits has been a persisting issue in Brazil. As a matter of fact, in 2022, the last year of former President Jair Bolsonaro, the deficit was close to 4.6% of GDP. In the first year of Lula, 2023, it jumped to 7.73%, and for the current year, 2024, the deficit is expected to hit 10% of GDP. In response to the 2020 health crisis, Brazil's public debt surged from 74% to 88% of GDP. The debt-to-GDP ratio had been decreasing since that peak, but it has started to grow again. The sustained high debt burden limits fiscal flexibility. This year, Brazil's economy faced twin deficits in trade and the national budget, raising concerns about fiscal sustainability. To complicate matters even more, the Ukraine war disrupted Brazil's access to fertilizers, a critical input for its agriculture, exacerbating production costs and economic issues. Despite the challenges, some of the fundamentals of the country allow it to navigate external shocks. Brazil is the largest Latin American economy, with over $2 trillion in annual output. It has a young and growing population that supports a large domestic market and a strong labor force. This demographic bonus fuels consumer demand and provides a workforce for industries. It has abundant resources in terms of energy, food production, and mineral wealth. Brazil experienced growth in early 2024, but since some of that growth was fueled by public spending, it proved unsustainable. Populist spending measures boosted short-term growth but worsened public accounts. Economic growth is expected to slow from 2.9% in 2023 to 2% in 2024, with inflation forecasts rising to 4%, above the official 3% target. Public spending has grown 6% above inflation since Lula took office, and analysts predict the primary deficit will not be eliminated as planned in 2024, potentially worsening in 2025. Earlier in December, the Financial Times reported that the Brazilian real is the third worst performing emerging market currency against the US dollar so far this year. Its near 10% decline ranking behind only the Turkish lira and the peso of perennially troubled neighbor Argentina. Meanwhile, the local Bovespa stock market index has dropped 8.6% over the same period. Apparently, this all could have been avoided, and the country's authorities were well aware of that. Lula da Silva ignored warnings from his economic advisors, incorporating tax breaks for low-income workers into a fiscal austerity plan, which triggered a sell-off in financial markets. Stocks dropped 2.4%, and the real hit a record low against the dollar. Investors fear Lula's resistance to deeper spending cuts could destabilize Brazil's economy and force the central bank to raise interest rates to 15%, while other nations are reducing theirs. Lula's administration's reluctance to implement necessary adjustments has left investors uneasy about Brazil's financial stability. A proposed plan to cut public spending was seen as underwhelming. The cuts totaled only 12 billion reals through 2026, and the simultaneous announcement of tax exemptions diminished their impact. This dual announcement caused market confusion and led to a further drop in the real. After the disappointing spending cuts, senior government officials engaged in damage control, including reassurances from congressional leaders and Finance Minister Fernando Haddad, who admitted the simultaneous announcement of cuts and tax exemptions was a bad move. Market sentiment improved slightly, but swap rates now reflect expectations of further interest rate hikes in the coming months. The good thing about Brazil is that the damage can still be reversed. If the government sends a clear signal to investors that it's willing to balance its accounts no matter the political costs, the markets will react to it quickly, and both interest rates and the currency exchange rate will move in favor of Brazil's economy. A factor that has played a major role in recent events related to the Brazilian economy has been the result of the United States presidential election. The return of Donald Trump's presidency in the U.S. negatively impacted Brazil's economic prospects, with analysts predicting a loss of market share in the U.S., Brazil's second-largest export market. Trump has been very vocal about imposing tariffs on goods coming from anywhere in the world, and Brazil is not a country with which the United States has a free trade deal. This is the complete opposite of what happened in the case of Argentina, where Trump's election has resulted in better prospects for Argentina over the next 4 years. To learn more about this phenomenon, check out this video about the alliance between Javier Milei and Donald Trump. This is Latinometry. Subscribe to the channel so that you don't miss any of our interesting videos about Latin America and the world. Please like and share this video, and thanks for watching.